Okay. I think in addition to this surge in crude oil prices and all that, is a recent development now that the United Arab Emirates is going to be leaving OPEC and OPEC plus. And I think they've actually left because they gave that announcement that they were leaving 1st of May, right? So they already left. Now, and they are the biggest, one of the biggest, I think they're actually the biggest crude oil producer to ever leave the cartel since its formation. I know this is going to weaken OPEC's grip on global supply at a time where Nigeria relies heavily on stable oil prices for revenue. So UAE has significant spare capacity. They're targeting about 5 million barrels per day by 2027, and they can actually ramp that up once they are no longer bound by OPEC plus quotas, and that's potentially adding about 1.6 million barrel per day in the medium term. So this is going to be significant for Nigeria. So my concern, and I'm sure any other person watching these investors, policy or authorities and all that will be looking at this. How concerned are you that this could lower long-term crude oil prices and pressure Nigeria's earnings and foreign reserves? Yeah, deep one with
Well,
you. Yeah.
okay. The issue in hand around the UAE actually leaving OPEC and OPEC plus. I think it's come with a lot of crisis in terms of there will be likely be excess supply into the market. This will lead to drop in prices. This will lead to OPEC losing its teams, its grip on the regulation of the supply to the market. More people will likely want to toe that line, knowing fully well that, of course, UAE has left and they want to go out there to actually pump as much as they can pump. Of course,
Yes.
every other person can actually follow the same line to go out there and pump as much as they can pump. Russia can actually pull out and say that they want to go out there to actually pump as much as they can pump. The end goal is that this will actually drop price in the global market. And this is not totally positive for Nigeria. And why I mean it will not be possible for Nigeria, it's positive for Nigeria because our FX revenue actually all from the oil and gas revenue from the oil and gas actually account for about close to about 85 to 90% of FX revenue.
FX revenue, right?
It simply means that we are not well diversified in that segment of the market, and what it will mean is that that will further drop our FX generating capacity, which may likely actually affect our capacity to actually meet the need for FX by locals or foreign guys that may likely need to actually exchange naira for dollars. And what that will also mean is that it can actually put pressure on the naira, and we may likely see naira further depreciate. But the good side of it is the fact that the drop in price will actually drop inflation. It simply means that the cost of buying gas at the station will actually drop in the same manner. And that will also mean that it will reduce the cost of actually controlling inflation on the part of the central bank. There may not be need for them to continually come to the market to actually issue mobiles to actually mop up liquidity in the system. So when you look at it, it comes like a blessing and it comes like a curse on
Of
the other
course.
side. But when you look at the overall, it will actually put pressure on FX.
On
And
FX.
that's one of the reasons why we are with our central bank. We need to actually tackle it. But the good side of it for me is that Nigeria is currently in the good book of most investors as we speak currently. When you look at the market, there's a lot of cheap instruments currently in the market that a lot of foreign
Yeah.
investors are actually looking at. There's automobile for them to actually invest into. There are treasury bills for them to actually invest in. Also, they're also very active in the bond space as well. And don't also forget that they're also very much in the equity space as well. So if we're able to actually continue to attract foreign portfolio investors, and that may likely help us to actually stabilize the volatility that we may likely encounter in such a time as that. While the end goal is to actually find a way to continue to actually be foreign direct investors into the country.
Okay, Andrew, with just similar to what the question I posed to Deepak. Now, the UAE is going to be free to pump as many oil as they want once the Strait of Hormuz situation eases. So, what are the wider implications for foreign exchange stability, naira outlook, and government revenue? Add to that, would this force could this force Nigeria to rethink its membership of OPEC as well? Could Nigeria also decide that we want to leave OPEC? And how should equity fixed income investors be positioning ahead of the volatility in oil prices?
Straight up, I don't think it would be in the interest of Nigeria to take the same route as the UAE. They have the
Okay.
capacity to ramp production, which we do not have. We're even struggling to meet. We're just at our OPEC quota of 1.5 million barrels per day. So it would not be in our interest to do that because we will not be able to supply as much as we want to the market. In terms of the impact on the FX and
FX
fixed income market,
stability,
so
naira outlook. Yeah.
the yeah, the high crude oil prices, we've seen that in reserve levels. Reserve levels have been very robust in recent times, and even we've also seen that in FX stability. Against the naira, the CBN always intervening, having the power to intervene in the market to maintain that stability in the market, and that is also part of the reason why we are seeing increased FPI flows into the equities market. So the elevated oil prices has fed positively to our foreign reserve levels, and then the attraction of foreign portfolio investments. If there is a tweak in that balance, in the sense that we start seeing falling oil prices because of the increased supply from the UAE, then we will begin to see investors review the position, and then it may not be an immediate hit to our own position, but over time, if oil prices continue to trend downwards, if oil prices trend downwards on account of increased supply, and then we see a resolution of the Strait of Hormuz position between the Iran and the US, then investors will begin to reconsider their position, especially for foreign portfolio investors, to reconsider their position in naira assets.
Deepo, do you think Nigerian investors should be hoping for a resolution of the crisis in the Middle East, or they want it to persist?
Nigerian investors.
Yes,
I think that
especially.
I think that for me, I think Nigerian investors are currently praying that the crisis is actually resolved, and not much people are actually positioned in surplus and naira. But
Okay.
when you look at what is happening in other segments of the market, it's actually creating more of that lowness in other
Okay.
segments of the market. You look at what's happening in the fixed income space, and the market has been very quiet, and we've not been seeing a lot of activity in that segment of the market. Investors are very careful to actually be aggressive at such a time like this because you don't know what policy the monetary policy guy may be taking to further want to cope the biting inflationary pressure. So a lot of investors want that to actually be resolved, but maybe holders of Aladel and Seplat may think otherwise. But when you look at it all in all, I'm a holder of Aladel, I'm a holder of Seplat, but I still want things to be resolved because for me, we are not feeling the so much impact of this FX generating capacity as a country. Just like what Andrew said, we barely produce a million 500.
I think we got to 1.8 or thereabout.
But don't forget
That's where
that
we are
that
now.
don't forget that include condensates. And
Okay.
yeah, so basically what we're still producing around 1.5 million barrels per day. It simply means that we are not actually maximizing this elevated price. And don't forget, before now, the last time oil was trading at this elevated level, that was around 2013,
10,
thereabout.
10,
2010,
10, yeah.
thereabouts. Don't forget that we were producing about 2.4 million barrels per day. So
Yes.
it gives you an idea of what we are currently leaving on the table. And that's why I feel that imagine we are producing up to like 2.5 million barrels per day. Can you imagine the level of aggression we currently have in our reserve?
Reserves.
Can you imagine the level of stability you'll be talking about on Naira and the capacity firepower of the central bank to be able to actually defend the currency will actually go to another level. So for me, I don't think it's something that you want it to continue because of the biting effect on an average Nigerian because of household prices of household. Just last week, when the oil price actually shot above $120, the price per liter actually went from 1,245 naira to 1,330 naira. So it gives you an idea of that's close to about 85 naira increase. So
Yeah.
these are the daily occurrence that Nigerians are actually feeling. And these are some of the things that we're actually feeling into the inflationary pressure that we're currently seeing. And you don't want to get to a level where you have to force the hand of the monetary policy guy to actually go back to the era of actually aggressively increasing policy rates, which will further and tighten uh, uh, the tighten household spending. And for me, I don't
Oh,
think it's something that we want in such a time as this.
yeah. I'm sure you understand why I'm asking that because with high crude oil prices, we don't seem to be benefiting. If crude oil prices were to decline, we would certainly not be benefiting because if crude oil prices come down, we'll see pressure on naira. Okay.
So for me, it depends on how much down the crude oil we're talking about. If the crude oil price comes to around $5, I think that more like a stable level for us.
Okay. I mean,
And
that's still going to be
so, yeah,
above the
yeah,
2026 budget
exactly.
metric.
And one way or the other, that will actually drop the pump price to as low as about 700 or 800 naira per liter from the current 8,330 level. So it gives you an idea of how we can actually change the trajectory of things. So for me, I will pick oil price at 75 naira and then oil price at
$75.
yes, sorry, $75 than oil price at $120.